It's about that time of day again here, folks. Welcome back. 7:30 a.m., Monday through Friday. Welcome to our crude oil morning prep. My name is Joseph James. I'm here with my partner in crime, Marty Errico, here this morning, and we've got a special presentation for you today. We're going from the screen to the trading floor. I'm here in Los Angeles. My name is Joseph. I'm a technical analyst, and I'll be providing my students with a live trade room every morning at 8 a.m. Eastern Time. 8 a.m. Eastern Time, Monday through Friday. Come out and join me. We got a free trial on the website. Check it out. With me also here today, my partner in crime, Marty Errico. Him and his partner, Jeffrey, they do a great job every morning running their morning broadcast at 8:50 a.m. Check them out at tradersaudio.com. So the idea today is we have a powerful way to get you started. We're going from the screen here in Los Angeles to the trading floor in New York City. Pretty powerful stuff. I'm going to begin this morning as a technical analyst using a top-down approach, which means I'm looking at slower time frames first, analyzing what's happened over the past few weeks, the past few days. I'll then move down to what happened the past few hours. We'll look at what happened overnight. Specifically, that means we're talking about what's happening in London, right? What came out of London. Once we're done analyzing overnight, we'll try to participate or anticipate the direction at the open. The opening bell here, 8 o'clock for crude or 9 o'clock for crude, 9:30 for the equities here in the U.S., we are going to be anticipating the direction at the open because we know if we can do that, we can find those high percentage trades starting as early as 8 a.m. Eastern Time. So the plan's pretty easy. Start with what's happened the past few weeks and months. Look at the past few hours and days. Anticipate direction. Find support and resistance to look for those high percentage opportunities in that direction. And those trades will begin here as early as 8 a.m. Eastern Time this morning. Now, once I'm done with you, I'm going to toss you all the way across the country to the NYMEX exchange. I got my partner in crime here, Marty Errico. He's our pit analyst, providing us with very, very important market direction, intermarket divergence between crude, RBOB gasoline, heating oil, and Brent crude. We'll take a look at market internals, option prices, and those very important and oftentimes elusive, those pit session trading levels. So stick around for that. Don't forget, those pit session levels are going to be a little bit different than what we see on the charts. All right, let's keep going. Now that we got that under control, now that you know the strategy for today, let's take a look at what the layout of the day looks like today. Again, as I said yesterday, all eyes and ears right now are on this developing story coming out of Syria. I'll tell you guys, I've been following this story here pretty closely the past 24, 36 hours, and obviously, we've seen some tremendous price moves from it, but it smells really, really fishy. It really, really does. The way that we're seeing the news media cover this right now is very similar to the way we see the news media cover the old fiscal cliff at the end of the year, right? I know I hate to bring that term up right now because every December, basically the last 45 days of the year, we have to deal with basically the news media bombarding us with this issue of the fiscal cliff, usually because they have nothing else to talk about. And I have a really bad feeling that we're getting a little bit of that again today. But in all reality, what it honestly feels like is it honestly feels like we have a situation where the news media and the political speakers here are stirring this pot. That's what it feels like. It feels like we've got a little bit of political and a whole lot of news media that is just stirring this thing right up. And it makes sense. We've got a low volume week. It's that classic case. And I hate to be the conspiracy theorist out there, but our politicians think that when we're focused on a holiday, Christmas, Hanukkah, New Year's, right? All of these major holidays, this is when the biggest military actions, the biggest things slip through Congress. I don't want to go down that route of being a suspicious conspiracy theorist, but I'll tell you right now, I've seen a bunch of these in my 10 years of doing this, and this smells very, very fishy. So with that said, we take this into today's trading. We have to be very, very careful today. These days are going to come around every few months. We're going to have this stuff happen every couple times a year, where we're going to feel like the price action has just completely come unhinged. And what I mean by that is that there's just as much likelihood as price going up $5 as it is going down $5. We don't really know who's in charge, and we don't know when that next statement's going to come out when that next news report is going to come out that shakes everything up. So the challenge is that this morning we have rookie traders out there saying, oh my goodness, I can make my whole month's salary right now. I can make a killing off of these moves. But remember, every single person that's making a killing right now, there's 3 or 4 people that are losing their whole entire trade accounts, their life savings, right? Because they're trying to predict what's going to happen next. Guys, I'm telling you right now, I am very, very suspicious of these moves here this week. I was yesterday as well. We made some great money yesterday going, buying those pullbacks, going higher. It was easy to make money yesterday trading crude oil because of that directional trend. But again, we're going to be looking at some charts this morning, and I don't want to go down that road of conspiracy theorists, but I'm very suspicious the way that our government here in the U.S. and the news media in the U.S. is really stirring this pot today. And if it wasn't for the holiday weekend coming up, remember, we got Labor Day weekend. This is like the 3rd biggest weekend of the year, right? This is a huge weekend coming up. Everybody's distraction, right? Everybody's focused on the barbecue grill and going to the lake and camping trips. Everyone's focused on that, finishing up the summer. And here we are with this convenient, suspicious chemical. It's tough. It's very, very tough to buy into all of it. And because of that, I'm going to be very, very careful here trading this week. We're only one more news event away from having something dramatic happen, or potentially, right, people could walk away from this and price could collapse. So it's very, very easy to see how this could get very interesting here on a what do we have here on a Wednesday morning. So let's take a look at it. First of all, now that I'm off my high horse here today, it was driving me nuts this morning. I'm looking at the news reports. I'm going, this is just this smells fishy. What do we got here? Wednesday, 5th week of the month, right? What day of the week? What week of the month? What month of the year? August. That's right. Perfect timing for a military strike, right? The whole U.S. is distracted by the end of the month. Boy, I know. I'll stop. Month of August. What do we know about the month of August? The month of August, consistently inconsistent. Low volume, right? Inconsistencies in price. So remember, that's going to be the most important thing to keep in mind. Inconsistency in price action. The month of volume, the last 2 weeks of the month, we know are going to be tough. We know there are going to be times of good price action and bad price action. You will see that again today. We know, of course, the 5th week of the month, it better be the last week of the month, or else I got to figure out how to count, right? I don't know many other months that have 6 weeks in a month, but this is the 5th Friday we have. 1, 2, 3, 4, 5 Fridays in the month of August. That means this is the last week of the month. That means the last week of the month, what does it tell us? Hail Mary trades, right? How many traders do you think lost their shirts this month trying to overtrade? Now their boss, their clients are up their rear ends telling them that they don't perform by the end of the month. They're gone, right? As you can imagine, traders will be coming into the market at the end of each month trying to make back what they lost. You can also imagine that traders coming in at the end of the month are speculators, right? Speculating on where price may be going in the fall. And we know that we've got those consumers of crude oil, shipping companies, airline companies, right? How much jet fuel do you think they're buying beginning in the end of the month? Think about all those people that are showing up at the end of the month. And now you can see why we expect to see a little more volatility going into the end of the month. The month of August is consistently inconsistent with volume, but the end of the month here, we will start to see that volatility come in as we go into the end of the month because of those hedgers and speculators. Wednesday, oh baby, as if we could have something else to talk about today, right? I think we need a few more things to put in the air, a few more balls here to put in the air. Wednesdays are inventory days. We know that every Wednesday morning, pending any holidays on Monday or Tuesday, we've got the petroleum status report. Now, I'm going to let Marty talk about this a little bit more, but we saw the first draw from the API number, all right, the American Petroleum Institute, okay, that came out yesterday at 4:30, and of course we have the Energy Institute of America, right, the EIA coming out at 10:30. We saw a build in the API last night. That means higher inventories. Higher inventories would suggest lower demand, but we will, of course, be checking to see what the EIA number comes out today at 10:30 a.m. Eastern Time. So Now that you know, this is a Wednesday, 5th week of the month, last bit of the month here in the month of August, right ahead of that Labor Day weekend, right? Beware, all right, guys? If you've been meaning to go see grandma, if you haven't gone to the dentist lately, if you've been meaning to go organize your garage, right, Friday's probably going to be a good day to do it. I joke around by saying that, but Labor Day weekend, guys, nobody's going to be focused on the markets on Friday. Nobody will be. I mean, there'll be a few people that will have to participate on Friday because it's the end of the month, but you're going to see it very, very early come, early go on Friday. So Friday will be a slow day. We got Wednesday and Thursday here to finish up the month of August, in my opinion, and we're looking forward to a pretty darn busy day today. I've got 10 a.m. pending home sales, 10:30 petroleum status report. That inventory number, now we have a specific plan in our trade room. We are not trading crude oil on inventory days between 10:15 and 10:40 a.m. And like I always say, this is easier said than done. You may want to enlist the help of some duct tape to tape yourself to your desk, not to overtrade that 10:15 to 10:40. I'm going to set my alarm. I always have a tough time not trading until 10:40, right? I've been doing this for a long time, and it's still, I get that news that comes out at 10:30. I can usually tell where it wants to go from there, but usually that first 10 minutes is very, very volatile. So again, just be aware of that, right? Just be aware of that. So waiting until 10:40, waiting until 10:40. So again, we got news today at 10:30. Last night's news, let me correct myself if I said a draw, right, a build. We saw the first build in 11 months last night. That means higher inventories. We'll be looking to see what happens here today at 10:30. And again, don't forget, 10:15 to 10:40, I'm sitting on hands. Now, I've got the rest of these charts all posted for you guys on the blog, so don't forget, check out crudeoilsquawk.blogspot, and of course, let's open up some charts. Take a look here first at a 30-minute chart. Now, this 30-minute chart actually makes you think that everything is just fine and dandy. Look, this doesn't look anything different than anything else we see, right? Looks pretty similar. We don't see anything that stands out. I see myself inside of the range from yesterday, previous high of day 111.75, previous low of day 105.88. I've got a support level here at 108.90. I've got 106.99. Look closely, guys. Look at that 106.99. That 106.99 is right on top of the previous low of day, fake out, breakout, and you have a trend line there. So if we can get down there, this looks to be a very, very tasty area here to look for a price reversal and then a buy. Because look what you got. You get the previous low of day times 2, right? Well, yeah, previous low of day 105.56, 105.88. Those previous lows, if we get below them and come back up, we call that our inside out setup. We also know, of course, we have support zone and this trend line here as well. So very, very easy to see. This is going to be a very high percentage buy. Now, we're going to have to be very careful today, again, because by the time we get down here, we may have already heard other news out of Syria. We may be dealing with inventories at 10:30. There are so many reasons why we may not be able to get that buy. It just may simply never reverse. It may go right through it, and if it does, we then begin selling short once we get through that. Basically, if I'm looking for a buy at a certain area, if we never get that buy and it blows right through it, that tells me that clearly the buyers aren't there, the sellers are there, and I will trade that direction accordingly. Remember, what was support becomes resistance. So we can use that support to buy from. We can also use that support now as resistance to look to get short. Now, I think the biggest clue today, though, comes out of London. You'll notice I have this shaded area here. This shaded area here is simply an opening range that I use for London. And you can see here 191 ticks. That's $1.91 overnight. Does anybody remember, anybody here been listening in on these calls? What's the average overnight that we see? What would be typical? What would cause me to come in at 8 o'clock in the morning and say, everything's pretty much the same as it always is? $1. Right? A dollar move is pretty much what we see typically coming out overnight when things are moving well. Sometimes we see, $0.75 of a dollar. Sometimes we'll see a $0.50 there. Boy, look at yesterday's range. Yesterday's range, what was it? 20 cents, 15 cents, or sorry, 2 days ago, right? Monday's range. So you can see how a trading range coming out of London going to be a big clue here. We normally see, and again, today may not be a normal day because of the Syria action we're hearing about, but normally we see about $1 move. This one now, $1.91, we know that $1.91 move, it's pretty important. It's going to tell us the rest of this day is probably going to be pretty volatile. So if I see a wide move coming out of London, I expect wide moves throughout the U.S. And if that's the case, don't forget, that means I want to let that final runner target run. I want to give myself a little bit more breathing room to let those trades play out and be patient. Because if we be patient letting these trades play out today, we're going to be rewarded by that. Big range, big targets. Narrow range, narrow targets. Capiche? Let's keep going. Now that we've got the 30-minute chart under control, let's keep moving. I moved down now to a 5400. This is my anchor chart number 1. This is my slowest time frame that I use. Now this chart, now we're talking. Now we can see, whoa, big move up. Now I had projected 109.50 yesterday morning, and we got there, and we got there pretty darn quick. I was expecting 109.50 to be the line in the sand, but as you can see, very easy to see this, guys. Now, we do a lot of talking about how the different sessions around the world react to different news. Remember how in our trade room we always talk about the fact that different people from around the world will not only read the news at different times of the day, but they'll also think of what that news is a little bit differently, right? Think about it. If the jobless claims number comes out tomorrow morning at 8:30 and people in Europe don't read it until 11:30, or people in Asia don't read it until they wake up again at 7 o'clock Eastern time, right? They're not going to react to it until later on in the day. And they may also have a different opinion of what that news means to them. This was a classic example of that yesterday. It's actually overnight. You can see what happened. As you go through the afternoon session, you see we close up shop here in the U.S. right at that 109.50. Exactly where I personally thought we were going to end up yesterday. And if you rewind the tape yesterday, you see that's exactly what I said. 109.53, I believe, was the number, or 109.55. So we finish up in the U.S., right? We get up there. We know exactly why. We bought all the way up. We sit here. As students in our trade room, we sat here wondering, what's next? Then what happens is the U.S. session goes to sleep. The Asian session picks it up. Obviously, in Asia, they're reacting to the news just like we did, and they push it higher. Now, once we go up and test that 112, now we've got Asia reacting. Now we've got London reacting. We see the first big bearish candlestick now, right here at 2 o'clock. So by the time Asia wraps up, London session begins, 3 a.m., they pull it right back. So this is a very, very interesting scenario where we can easily see, again, price in the U.S. gets pushed up, 109.50. Asia pushes it higher to 112. Of course, very, very easy to see in Asia, a lot of speculative trading in Asia, a lot of rumor-based trading in Asia, so we know why that happened. And now here we are in a pullback. Big question is, are we going higher again in the U.S., or are we going to collapse and go back into that range, back below that? In this case, it would be 108.90. I have support levels below me. I have to be ready for anything today. If price does start rising higher again, you better believe it, I'll be buying pullbacks, wave patterns to get the long side. If price does collapse, though, I can get short, but I do need to take profit here at 108.90 and be aware that may result in a reversal here at 108.90. I've got 107.87 as support below us, 106.84. And again, there's another very, very tasty buy zone there at that 105.37, which puts us right at that trend line, right? And we can now, of course, go higher. So the way the plan is for me today, I will look to sell short if the personality says so, down to that 108.90. But again, I will be looking for these support levels to hold. If any of these support areas hold, I will use that as an excuse to begin buying again. Again, easy to speculate to the upside with this chart, but at the same time, we have to be very, very keen on what the market personality is telling us. If we see the buyers walk away from this, we've got to be ready to get short. We can't be married to the long side. It is pretty easy to see, though, at this time, the buyers are still pretty strong. So we will have most likely a pretty easy job here today with buying pullbacks. Looking forward here at a little bit faster time frame here now, we begin to see there's that 108.74. That was the previous highs. It was actually, as we called it, a reversal line, right? We saw previous highs there at 108.74. So we know that's going to be a level of support. What was previous resistance will indeed be considered support. So it really all comes down to, we don't have any news until 10 o'clock. We get the opening bell at 9 o'clock. We got 10:30 inventory news. We get a lot that can happen here between now and that 10 o'clock first news of the morning here. I could easily see price going higher. And again, everybody's watching to buy right now, so you don't need me to remind you about that. What I will be looking for, though, is look at these candlesticks. They couldn't close below 109.59. If we get a close below 109.59, we will be selling short, and I'm going to use that 108.91 to 108.12 as my target. It's going to be very, very, very important that we sit and wait to see what happens at this 108.91 to 108.12. In my opinion, we may definitely see, if the price collapses, and again, we may not see it go anywhere lower at all. It may keep going higher here. But if it does collapse, be on the lookout. We are going to buy this area. That's a very strong buy because we have the buy zone at 108.91 along with that trend line. So be aware to buy at that 108.91. But be on the lookout for this. If we see it collapse and it just sits, if it sits here, because think about it, what is that? That's the line in the sand. You've got the post-Syria news above us. You've got the prior news below us. So think about what could happen here. If it goes and sits, it's just like when it sits on top of the previous high of day, right? We know that something is wrong. We know the buyers aren't confident to keep buying. We know the sellers aren't confident to keep selling. And so that's one very, very big concern here. If we do see it bounce, yes, we're going to buy that. But if it doesn't bounce, if it just sits, that's going to be a big, big red flag in my book. So we've got news at 10 o'clock, 10:30. It's the end of the month of August. Expect inconsistent volume. So we're going to be sitting on hands sometimes today. We're going to be trading sometimes today, keeping an eye on that market personality. We know that we clearly have a bias to the upside right now, so we're looking for wave patterns long. And we also know, of course, that we have that suspicious area, 108.91, right? We will look to buy it, but if it does end up hanging up here, we know why, and we know to be very careful. Don't be married to the upside today. Be open-minded to both sides, right? I gotta remind us all about that, myself included, because we never know when the bottom can fall out of this thing here. Remember, this is crude we're talking about. Now that we've looked at the charts today, now that you know the direction, now that you know some of the most important levels of support and resistance, I know I've been keeping you guys here too long. There's been a lot to talk about here this morning, but I want to hear from Marty. I know that Marty's got some very important information. I can't wait to hear what he's thinking about today's inventory number, about what's happening out of Syria. Marty, how are you today, my friend? Good to have you back here with us. What do you see on the floor today? Are they going nuts down there about this issue in the Middle East right now?
Yes, it's been real busy here the last, really, yesterday, today, very type of high volume, open interest kind of coming in, so rising, I should say. So we've been watching just really kind of continuation of this move to the upside here. So again, it's just been really kind of just wow, that's all I could say. Big activity here in the last, couple days. So, all right, guys, let's talk about it now this morning as we are up to in the 110 handle, as we spoke about in the recap yesterday, as we spoke about kind of into our prep from yesterday. Again, we've been seeing a lot of activity here to the upside. Again, they show a lot of interest here. Short-term daily options, 108 halves, traded over about 4,000 times yesterday in short-term dailies. They push up prices. The premium was real cheap on that, so they're all in the money, right? We saw a big, big, big range, first of all, but let's also just show you guys the other big, large strikes that were traded. We saw 110s. Well, we saw 109 halves, 110s, 112 strikes as well, all calls to the upside in the front month. So they really target the upside here, and they like those calls. Real quickly, again, as JJ was mentioning here, end of the month, we have physical delivery buyers coming in, and you can see as first, let me show you guys again just our one worksheet that we have here. Physical delivery buyers are coming real light again over yesterday's trade, as today's usually, well, really yesterday, this beginning of the week is more the physical delivery buying, but in total, you can see here we had very kind of light buying. Again, these are 100-barrel contracts. So again, very light here on Goldman's end, on BP's end. But if you look over into our other worksheet, you'll see that we have our physical delivery buyers. Again, they come in like the big ones that work. These guys are like they're working for the refineries and producers. So a lot of producers coming in and doing their physical delivery buying for crude. This is outright crude here. You can see we have New Edge coming in and buying over 6,000, right, 6,700. We have ADM coming in and buying over 2,700, and then Bank New York Mellon right? They come in and they do a little bit of buying as well. But you can see all our major big players here and our major big players on the other sheet as well. You know, all of our big institutions, Goldman, Jefferies, New Edge, right? Morgan Stanley, Barclays, Citi. So that was basically what we've been seeing. Again, physical delivery buying, presence in the market is there. You can see crude rising as we have some resistance up above. We really kind of got like that 111. We have 110.87, 111 even, and we have 112 as well that we want to keep an eye on. All right, guys, let's get to it now this morning here. We're talking real quickly, just looking at all our usual suspects here this morning. You can see, again, we have our crude higher today by about now $1.50 already with huge implied volatility, but we'll get to that in just a second. We have your RBOB trading higher, heating oil, and your Brent all pointing higher this morning as we do have, again, those geopolitical issues which are causing the market to rise. Again, we're up about $1.50 across the board. Spreads this morning are kind of tightening up, but again, keep in mind they are kind of in a little bit of a bullish sentiment at the moment, but again, could change at any time. Remember, let's also talk about besides the crack values and all of our other spreads, right, we can see the calendars as well are showing us a little bit of some bullish activity. Only divergence is in the Novi-D's, a little bit of sideways activity, unchanged, I should say, really sideways unchanged activity in the Novi-D's. Ladies and gentlemen, if you look with me here, you'll see your dollar index. We've been having that risk-on sentiment now. Now, I'm judging where the dollar's at from not the Globex session open where you see the net change on the day. I'm using the different open. So right now we're a little lower on the dollar, but again starting to rebound and work its way back up towards the 81.46.5. Again, I'm using a different level on the dollar to judge where we're open, but you can see we are working our way back, but still lower on the day in terms of a net change standpoint here by just almost 20 points. Right? We've been watching your euro higher. We've been watching your your euro, sorry, lower, along with all of our other commodity currencies, okay, right? So risk-on sentiment back into the market. Let's also talk about API numbers from last night. This is the main driver of the market besides this geopolitical news here. We have, of course, the American Petroleum Institution API numbers, and I'm going to get them up for you in just a sec here. So here you are. Here you have it with crude yesterday coming out of the API. API tells us that there was actually a increase in crude supplies and crude stocks. Looks like 2.5 million barrel build in the crude, as JJ was saying, the first build in 11 weeks, which was pretty impressive to see in the summer driving season. As we come towards the end of the summer driving season, kind of makes sense why we're getting that build. Cushing, though, very divergent here. Cushing shows a draw of 863,000 barrels, and I believe that's the reason why we're rallying here, and that's why we got that big uptick. Besides the Syrian news, but again, another influence to trade higher, that Cushing number. Right, gasoline showed a draw of 1.1 million, and distillate showed a very minor build of only 3,000, so we can almost call that almost even unchanged. But again, overall, mixed out of the API, first build in 11 weeks. We got your forecast here on the left, and you can see forecast for today's number. We're looking for 200,000 barrel build in the crude, 1.2 million barrel draw in the gasoline, and distillates are looking for a build of 675,000. Of course, as always the case, we really want to pay attention to that Cushing number and the refinery utilization rate, as it's very important here in the summertime. So again, that was just up there. I'll just put it up one more time real quick so you guys can just take a look at that, right? Okay, moving on now. As we mentioned, we looked across the board and we kind of were able to get a good idea to see what direction we're in. Again, we have a higher risk-on day with our currency differential pointing kind of just a little bullish at the moment, but slight divergence in there. Again, we're going to be looking at a net change standpoint valuation of that instead of anything else. Okay, so in the natural gas as well, I want to talk about natural gas. Boy, we nailed that to the T yesterday. We came in and we tried to buy the lower end of this channel. I'm not even going to zoom out the chart too much. Again, when to buy the lower end of the channel, we have to thank JJ for the two-step pattern long, right, above the 351 even, and boy, oh boy, oh boy, look where we're at now. If we open up above 355.60, I'll be concerned to see upside activity like we did in the overnight session, but again, this was actually the level of resistance that I gave out yesterday, so kind of shocked that we had this roll activity here into the October contract, and all of a sudden seen this huge range to the upside. yesterday. So again, it all comes down to possibly fading this move again, looking for the 355.60 level if we can open up above or below that. But again, it seems like today we're going to be fading that move. Keep in mind we also have expiration of options yesterday. Today's the outright expiration. That's right. Yeah, we're going to be expiring the outright contract today for the September natural gas. So we are in October natural gas. So again, trade within this range. Still trade within this channel. Look at the resistance up above at 362.80, 364 even, and 365 even, right? As you can see here, we end up closing and settling yesterday's trade at the 357.5, and again, we want to pay attention to that settlement number, and most importantly, that 355.60 level, right? So far, we've been watching your dollar just doing a little bit of rising, but still kind of a little bit lower off the other net change. We look at 81.46.5. And then your crude kind of trading up in the mid-110 handle, looking at resistance up above. As we look at our continuous contract, again, I pulled some levels earlier around that 110.67, 111.82, and 111 even. Then we have 112s, so we have that level of resistance above. Again, we're using continuous contracts to get these levels as we are pretty much in uncharted territories. Taking a quick look, ladies and gentlemen, that's right, at levels here for today, Wednesday, the 28th, again, as we have inventory numbers today. We also talked about the forecasts, right? Looking at yesterday's pit session high, 109.32. The low is at 108.24. We close and settle at 109 even. We're well above that, and the daily pivot today was actually at 108.85. Still is 108.85, but we are well above that, with resistance up above at 109.46. Already passed it. 109.93. Already passed up and trading near it, at least up about 110.52, and we had that 111.01. Again, I want to add in 110. We could, I guess, just add in just so you guys know, 110.86, 87, right? 111, 111.87, and then we also have that 112. Support down below, ladies and gentlemen, 108.38, 107.77, and 106.69. Again, open interest this morning here, 324,685. Giving us an idea that they're squeezing out these shorts in the market, of course, right? Also, want to talk about here implied volatility exploding to the upside. Again, very firm here. Calls opposed to puts here, skew very firm to the upside, right? We've been watching volatility exploding to the upside, up to 27%. Implied volatility this morning is about 30% right now at the moment, actually 30% in implied volatility, exploding to the upside. The OVX closed at 27.25, but really bullish activity when this volatility explodes like that. And again, calls are very firm, puts are rather soft, and we've been having skew very high, and we've been watching a lot of interest in the 112 call to the upside, right? They even placed a little money in the 120s, but we'll just go to 112. Guys, let's continue on and take a look at the natural gas real quickly. October contract, pit session high from yesterday, 358 even. Again, that's 358 even was your pit session high from yesterday on the October contract. Your low is at 348.30. Right, close the settlement number, 357.5. Daily pivot, 354.60. Right now we're trading at 356.10, so we're getting close. That daily pivot is going to be significant, I believe, today. So daily pivot today, 354.60, which is, again, right here, ladies and gentlemen, for your daily pivot, right? 354.60. Resistance up above at 360.90, 364.30, and 374 even. Again, I like to even throw in the 365, as that's only, 7 ticks away, right, from that R2. Support down below 351.20, 344.90, and 335.20. Again, open interest 216,947 with implied volatility, trading at about 33% right now. This morning we're about 33%, yes, on the money. Vol index 3280. Again, they show a lot of interest in the 350 call, 355 call. Very firm here, over about 2,000 traded in the pit yesterday, and now we're looking at, again, maybe some profit taking around that 360 to 362, 360 to 365 strike, as they show, again, on the chart, you can clearly see we started to take a little bit of profit around that 360 level, 362.80 to be exact, so that makes perfect sense here, as we're going to trade within range. Look where we open up, and again, trade within range. That's all I can say. We can call this, again, the new trading range almost, if you will, now, as we're kind of in this expiration, so maybe we can drift on down by those lows. Alrighty, guys, that's about it here for me. I got to rock and roll out of here real quickly, and then we're going to rock and roll on into the pre-pit session commentary at 8:50. Again, I'd like to thank you guys for joining us. I'm going to throw it back on over to JJ.
Thank you so much, Marty. As always, excellent information today, guys and gals. Boy, you hear that right there? We haven't heard that all summer. We haven't heard that all summer. Boy, that was enough right there, Marty, to get me excited for today. I love it. Guys, one of the biggest benefits of having Marty here with us, in my opinion, is being able to hear that roar in the background, right? Being able to hear what's going on in the background. He's got his finger on the pulse of this market, and it sounds like we're going to have another exciting day here today in our live trade room. And, of course, don't forget to contact Marty or myself. Would you like a link? Would you like an invitation link to come out and join us for this live broadcast where you can actually ask questions? We've had a bunch of great questions here I've been answering while we've been on the call today. Shoot us an email. I'm JJ at School of Trade. That was Marty at Traders Audio. Don't forget, Marty and his partner Jeffrey, they run a broadcast every morning at Traders Audio. I've got my live trade room at schooloftrade.com, and we have another very, very exciting day ahead of us. Don't forget about that inventory news. It's easy to forget that crude oil news is coming out at 10:30 today, right, as if we needed something else to throw into the air. And also, too, I want to remind you guys, this weekend is Labor Day weekend. We are going to be out of the office on Friday, and Monday is a holiday. So we've only got one more day left this week. So today's Wednesday. Tomorrow's Thursday, of course. So Friday we're going to be off, so no broadcast on Friday. Saturday and Sunday. Monday's a holiday, so we'll see you the Tuesday afterwards. All right, just be aware of that. Be aware of that. So no broadcast on Friday or Monday. Have you guys a great Labor Day holiday weekend, right? It's going to be a good one. This is always one of the best times of the year. All right, guys, now you know the plan today. Let's get out there and execute the plan. Thank you so much for coming out and joining me from the entire team here in Los Angeles and from Traders Audio. Thank you so much for being here, guys. We'll see you in 23 hours and 30 minutes for a Thirsty Thursday edition. Catch you guys here tomorrow morning, 7:30 a.m. Adios, amigos. Bye-bye for now.